In this video, we're going to be talking about the importance of round numbers, double zeros and 50s on the US dollar pairs as well as other instruments. Stay tuned, traders. We'll be right back. Today we're going to be talking about the importance of the round numbers on the US dollar crosses. We'll look at some examples on other instruments too. Before we get started though, what I'd like you to do is smash the like button for me. It helps the YouTube algorithm, help get this video out to more traders, help simplify their trading, and hopefully help improve their results. So we talked in the other video about the difference with gold and the importance of round numbers in that video. Gold is a completely different beast to a lot of the other major US pairs. It's tons of movement, very specific to numbers, but the same rules apply to the US dollar pairs. And one of the biggest ways that I use to filter out any possible trade setups is whether or not, when the timing window shows up, if they are at round numbers, 50s, double zeros. The same thing applies if you're trading futures, index futures, commodities, Bitcoin. We'll look at some examples of charts on Bitcoin as well. Round numbers, double zeros. But the most important thing to me for any of the pairs, if I was to ever trade them, is are they at round numbers? The euro, the pound, the Canadian dollar, which I look at often for the US session. The Canadian dollar has some excellent opportunities during the US session, and again, I will always look to see if we're at 50s or double zeros heading into the session. The one thing that I want to know is when we head into that window, have they already done a stop hunt, or are they now in the process in that first hour moving to hit stops or moving into round numbers? So we have days, and we'll look at some examples this week, where some of the pairs were floating in between at a quarter level, which I will not take a trade off in the quarter level because I want to see it move to major round numbers. And if you've been following these pairs long enough with me, you've seen this on the pound. The pound loves double zeros. The US Canadian loves round numbers. We saw some excellent trade setups last night on both of those pairs, specifically coming off of round numbers. And we also saw some days during the week, especially on the euro, where it's just meandered inside of a box and not really gone anywhere. And that helps keep me out of poor quality trade setups. So again, I want to see some sort of conviction from the market moving to a level. If we're at double zeros, I still look at this as a box. We could be in a box for the day. We could be in a 50 pip box for the day itself, or we could be in a 100 pip box for the week, 150 pip box for the week. And again, we'll look at some examples of how the weeks evolved on some of those major pairs. 8 to 11 p.m. for Asia, 2 to 5 a.m. for Europe, London, 8 to 11 a.m. for New York, and that's New York Eastern Standard Time. I'm using the 15-minute charts for my levels, and on the major pairs, I use the 15-minute charts to enter and exit the markets. As I've talked about with gold, I use the 1 minute once I get to the extremes for an opportunity to enter with a tighter risk and looking at the asymmetrical risk-reward opportunity. When I'm looking at the major pairs, specifically London and New York, I really would not trade any in Asia unless there was an ideal setup, again coming off of round numbers, 50s, double zeros. London 4 a.m., New York 9:30 a.m. specifically for the equity markets to open. I would be looking for an opportunity at those times, specifically at numbers. If I am not at numbers, I won't even bother. I'll come back the next session and look to see if they've gotten to the numbers at that point. If they're inside, there's a chance if they're inside in London, they may move to that level for the stop hunt, or they're already in an existing move from the previous day. So obviously if they are, we would be continuing in the direction of that original trend. But if the market goes vertical at any point, whether it's down or up, I know now that potentially I could be looking at a trade setup either towards the end of the 12 candle window if they've moved, if it's in movement, in process, and it's moving towards 50 or 0. So again, if it's up here and it's moving down to the quarter level and going sideways, that doesn't really interest me. But heading into the next window, I will be paying attention to see what's evolved from the previous session and be looking for an opportunity either for a move for a reversal trade, again A trend trade for a breakout pullback continuation off of numbers, whether that's a short trade or a long trade. A reversal trade for a false break stop hunt, possibly extending out 25 pips or into the numbers themselves, taking out previous highs or lows. Or if we're in a range-bound market where the market is just going to be trading and going sideways. Now we will look at some examples as to why I trade. The difference why I mainly focus on gold is that there's 50 pips pretty much every single session, whereas on a lot of the major pairs we may get 1 or 2 good 50 pip trades a week depending on the pair, but for the most part these markets will move 25 pip increments, whereas with gold we'll get 50 pips in a session and it may move 25 more on either side in the open or towards the end of that session. But again, the amount of movement compared to the majors is a lot more on gold. And like last night we saw in the British pound, it had a great 50 pip move, but it took 2 hours to go the 50 pips, whereas on gold we can see gold move 50 pips in a matter of minutes. And that's sort of the attraction to trading that. And as I mentioned before, if you are looking at gold, watch it, learn from it, just study it, don't trade it until you're at that point where you know exactly what you're doing, the timing windows, the whole thing, because gold is very volatile. But when you start to look at its behavior at the numbers, at the specific timings, then you'll see the opportunities. But with these major pairs, the difference primarily is the amount of movement is not the same, but it behaves around the round numbers very specifically as well, with the same 3 types of trade setups: trend trades, reversal trades, and range-bound trades. We're going to look at some examples, but again, we'll look at comparing the difference between the 2 different markets, but we'll look at Bitcoin just to have a quick look at that in terms of how it behaves off numbers. I don't trade Bitcoin. I have no involvement with Bitcoin, but I've had traders ask me about it. I've had traders ask me about shares. It's the same thing. And I've had traders ask me about indexes. Regardless of the instrument, you will still see that behavior respecting major round numbers. Jesse Livermore talked about the importance of double zeros and 100 levels when he was trading. So it's not new, it's not a secret, but it helps you filter out poor quality setups. That's the most important thing that I use. If I look at a chart and it's going in between at a quarter level, I'm not even interested until I see that market move to a level, and then I'm going to establish a thesis based on where we're at in the timing window as we head into the next session. Is this a trend trade already in progress and I'm looking for a continuation? Or are we now at a peak formation, possibly low or high, for a reversal back? And again, some of those moves are only going to be 25 pips, but as we saw last night, when the market builds up over 3-4 days, we may be looking at a 50 pip or 100 pip move or more, especially if there's other catalysts potentially involved for news, etc., that could help propel that market to move even further. So hopefully you got some value from today's video, traders. Round numbers, very significant. Again, just peeling back the onion, the timing window at middle hour, if they haven't already hit the stops or locked in a high or low, that middle hour can be so important for either the breakout for the trend trade or the stop hunt. And again, some of those stop hunts will be 50 pips and they're over in a few minutes. Pin hammers and engulfments and the 3 types of trades, and understanding where the quarter levels are for extended stop hunts. Stay disciplined, stay focused, have a great trading session, and may the markets go with you.
So continuing our discussion on the US dollar pairs and round numbers, one of the key criteria that I look for to help identify the best high probability trade setups are when the pairs are at round numbers, 50s and double zeros. So we're looking at the British pound, and just with a quick glance each day, I can have an idea in the timing window if we are in the middle of a 50 pip box or if we are at numbers when the window opens. There's a couple key things I look for with the pound and the other pairs at the beginning of the week, and that is a peak formation. So a stop hunt down at the beginning of the week, which potentially could tell us that we are about to head into an up week. The initial consolidation is sideways inside of a 50 pip box. We get to the London window. We're not at 50 or double zeros. The initial move is to the low side of the market. They break through the double zeros before working below the double zeros and into our US session window, engulf and reverse and come back up. So double zeros, we come to the US timing window. The market has now gone to a round number level and it's working down and before the engulfment for our W reversal, but also a peak formation low at the beginning of the week. This can help us form our bias in our weekly template. The next day, the market in Asia breaks through 50, taking out the previous day's high. So in the Asian session, the market consolidates at 50 in the open of the session and then continues to move into the middle of the 50 pip box between 50 and double zeros, and is trading sideways at 75. And as I've said, when I'm inside the middle of a box and we've come from the bottom in the middle or from the top to the middle, I want to be trading in the direction of the initial peak formation trade. So the peak formation at the beginning of the week is down. We're now in the middle of the box. I'm looking for a continuation trade at or with the numbers in terms of following this trend. Now, again, we could be in a range-bound week. We could be in a trending week. This is a textbook situation where we have consolidation, stop hunt, peak formation, and then a continuation through round numbers at the beginning of the day. The consolidation is in the middle of the 50 pip box before the continuation into the US session. So again, the next day we've broken through double zeros. Our bias then is to be trading in the long direction towards the next 50 pip round number. In our our Asia Europe window, we've come up to the quarter in the middle of our 50 pip box before we get our continuation engulfment after the initial first hour stop hunt. So again, that first hour, I'm always looking for, if we're already in an existing trade, the continuation or the stop hunt back against the trade, or as we saw on Monday, in the middle, the break to the bottom of the box. So again, round numbers. Each day I'm looking where are we at when we come to the next timing window. If we're in London, we're trading with the initial continuation of that trend. But in the US session, again, we're between round numbers and the quarter level, which potentially means we could be trading into the numbers. If traders went long here, they would be in the perception that now we could be failing near or at the high of the day, which at that time was the high of the London session. Again, we head into our next day's window. The sell-off occurred from 50 back to the 75 level. And again, an example of where there is a high in place and the market is working back up into the high. We get to our 12 candle Europe window. They trade into the round numbers, engulf 25 pip stop hunt back through to the low of the day and the Asian session. Again, coming back through the quarter level, this middle area is an area that I want to avoid, but if I am going to be entering into the market, I want to be trading in the direction of where that initial move peak formation has come from. So initially on Monday, we saw the peak formation into double zeros. We're thinking double zero to double zero. The market traded through double zeros. We've talked about this. The pound loves double zeros. We get halfway up into the next double zero box. They're working the high. They pull it down. They work the high one more time. They drop it down 25 pips. Go into consolidation, stop hunt high in the US session window before the stop hunt back to the low of the day and the move back down to double zeros. We're now between double zeros and 50. So we're looking for something off of double zeros or 50 or a breakdown pullback into the zeros. The market breaks down below zero, works into zeros, gives us our W formation and reverses in the US session 12 candle window with an engulfment pin hammer for the 50 pip stop hunt to the high of the week. So again, each day, regardless of the pairs that I'm looking at, we can look at any day on the pound. In the timing window, I want to know, am I at round numbers? Because that's where the highest probability trade opportunity can happen with these pairs. And again, that may be only a 25 pip move. But in most cases, especially as the week evolves and we get a bigger range establishing, we can now be looking for moves off of 50 through double zeros to the next 50 pip box. If it's a peak formation, again, another example of a Friday, Monday, the initial move is to the upside, putting a peak formation high in for the week potentially, and then working down sideways back into double zeros for the day 1, day 2, day 3, day 4, and reversal on Thursday, Friday. So again, 50s and double zeros. And again, just as I've mentioned, I'm mainly only trading gold, but one of the pairs I will look at for the U.S. session, which I find offers some great opportunities, is the U.S. Canadian dollar. And again, round numbers. As I come into the U.S. session window, I'll often have a quick glance to see where we're at when the session opens. Are we near 50 or 0? If not, does the market make a move to one of those levels before the New York equity market opens? So again, the Canadian dollar is a pair that tends to move well in the U.S. session, not always offering a textbook perfect trade setup, but it tends to offer some great setups. And again, 50s and 0s. So Asia market's trading around 0. The market trades down from zeros down to the previous day's low in engulfment, and a nice 30 to 40 pip move back up. Again, the market trading throughout the day, working into 50, stop hunt high. The New York equity market opens and a 50 pip move down. So just looking at picking out pairs that potentially during the next window, especially for these U.S. pairs, they tend to move well as the week evolves, Monday, Tuesday, Wednesday. If we're in a template where we're working higher over the 3 days or lower over the 3 days, these U.S. session, Thursday, Friday reversals can offer us some big moves. And again, some of the pairs may only move 25. Often as we get later in the week, the Canadian dollar again has been offering some good trades in that U.S. session. And these are trades that again will come off of 0s to 50 or 50 to 0. And again, a quick glance during the day, Asia, London can tell us, are we in the middle of a box or have we made a move down to major round numbers? How did the market behave? What is the opportunity as the next session begins to trade? Again, the euro, same thing. I'll look at the euro occasionally. I'm not a big fan of trading that for myself. I just find that the movement is not, again, gold moves a lot, but these U.S. pairs, each session, a quick glance, we can take a look during a session. Are we at or near numbers? If we're in the middle of a box, if the market has worked its way down to round numbers, worked down to 50, the Asian session, potentially putting a low of the day in place. London consolidating at the halfway mark. I want to be trading in the direction of that initial move from the peak formation as we head into the next window. The market breaks through double zeros and continues to move. Next day, we consolidate between 50 and 25. Into the U.S. session, the market gives us our W formation for a 25 plus pip move through the high of the day through 50. Consolidates and layers above 50 the next day, and continuation of that initial move from the previous day, Monday. Again, peak formation low, working off of 50 pips. We're working up towards the top of the double zero box. The market consolidates at double zeros, continues to trade. If we make it through this quarter level, we could be moving up to the top of the 50 pip box. The market pins up towards 43 area before consolidating, ending the week on Friday, working into the Wednesday's high on Thursday. Not quite getting to 50, pinning up there though, before pulling back and consolidating in that mid-quarter range, stop hunting down to the double zeros, putting a peak formation low in place, which could be possibly a reset heading into Monday, and we could see how that market behaves around the quarter level, and if we continue and move through 50 for a peak formation low and a continuation in the long direction on Monday. Now again, 50s and zeros, if the market was to roll over and break down double zeros, I'd be looking for a reversal down towards the next 50 level. Now again, Bitcoin, I'm not trading Bitcoin. I can't say that it would trade as specific to the timing windows either, as it trades 7 days a week, 24 hours a day with some brokers. But again, numbers, it seems to respect round numbers. Double zeros, 50, double zero and 50, consolidation, layering on top of the zeros and breaking out in continuation. Again, obviously, we've had quite a bit of volatility on Bitcoin. But the point of this video is that regardless of the instrument, these markets tend to move off of round numbers, 50s and double zeros specifically. Consolidations can occur around the quarter levels. And again, just some simple concepts working from the highs and the lows. working down, working into the low, working into double zeros, coming back up, working into the high, through 75, back up into double zeros in the US session for the stop hunt, back down through the low of the day on Friday, and again coming off of double zeros, pinning down through 50, extra quarter extension, and then pulling back and consolidating between double zeros heading into the end of the week. So again, indexes, cryptocurrencies on a micro level, if there's multiple big players, algorithms, electronic market makers, time and money, time and price levels. So double zeros and 50s can be very significant in any market, but also help you identify potentially the highest probability opportunities, especially when they're at the high or the low heading into the next equity market trading session. So hopefully you got value from today's video. Traders, U.S. cross pairs, again, one of the reasons I focus on gold is that it has a lot more volatility. Some of the U.S. pairs will offer great trade setups, but I look for a quick glance to see if anything's at the major round numbers and how it's gone into getting to that level as we head into the next 12 candle window. Have a great trading session. Thank you again for hitting the like button. Enjoy your weekend, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.